Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ENOVA International INC quarterly report. ENOVA International Inc. provides a range of online financial services to consumers across the United States, Brazil, and internationally. These services include Installment Loans Line of Credit Accounts CSO, Consumer Sales Organization, bank programs for near-prime unsecured consumer installment loans, marketing services for bank programs, loan servicing for bank programs, money transfer services. The company operates under several brand names, including CashNet USA, Net Credit, On Deck, Headway Capital, Simplic, and Pangea. ENOVA International, Inc.'s stock price has increased significantly over the past year, surpassing 43.38%. Several key factors have contributed to this substantial rise. Strong financial results and earnings beats have been a major driver of ENOVA's success. The company consistently exceeded market expectations in both its second and third quarters of 2025, with impressive revenue growth and adjusted EPS beating analyst estimates by nearly 11%. Robust revenue growth has also played a significant role, with a notable 22% increase mentioned in one report and 16.3% year-over-year growth in Q3 2025. Management's confidence in the company's prospects is evident through share buybacks, while positive analyst attention and raised price targets have further boosted investor sentiment. Additionally, ENOVA's strong loan origination growth, particularly in small business lending, has contributed to its success. Favorable market conditions, including expectations of lower interest rates, have also boosted investor confidence in the financial services sector. Overall, ENOVA International, Inc.'s combination of strong financial performance, robust revenue growth, and favorable market conditions has driven its stock price increase over the past year. The primary drivers of revenue growth for a financial institution are multifaceted. A significant contributor is the increase in loans and finance receivables at fair value, which rose by 21% from 2024 to 2025. This was accompanied by a 14% surge in net interest income and a substantial 31% jump in non-interest income. The growth of the overall portfolio, fueled by higher levels of originations leading to increased loan balances, also played a crucial role. The average combined loan and finance receivable balance saw a notable increase of 10.4%, while originations outpaced repayments, resulting in a 9.5% rise in the ending balance. Furthermore, specific portfolio segments demonstrated impressive growth, with small business revenue increasing by 29.3% and consumer portfolio revenue rising by 7.9%. These factors collectively contributed to the institution's revenue growth, underscoring the importance of strategic lending practices and diversified revenue streams. Net income and profit margins have experienced significant growth over the past year. In Q3 2025, net income surged by 85%, rising from $43.4 million to $80.3 million. This increase is also reflected in the year-to-date (YTD) results, where net income grew by 57% from $145.8 million to $229.4 million. Profit margins have also expanded, with notable increases in Q3 2025. The net income margin rose from 6.3% to 10%, while the operating profit margin increased from 22.2% to 24.5%. Additionally, adjusted earnings margin jumped from 67.9% to 88.8%. These improvements can be attributed to various factors, including cost-cutting measures, revenue growth, and efficient operational management. The company's ability to maintain a strong financial performance is a testament to its strategic planning and execution. The company is generating a significant increase in positive operating cash flow. For the 9 months ended September 30, 2025, the net cash provided by operating activities was $1,964,499 compared to $1,634,359 in 2024, indicating an improvement of $330,140. This trend is consistent across multiple summaries, with all showing a substantial increase in positive operating cash flow for 2025 over 2024. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, total debt has increased from $3.29 million to $4.11 million, while long-term debt has risen from $2.69 billion to $3.22 billion. Additionally, the total debt commitment amount has grown from $665 million to $825 million. However, interest expenses have shown mixed results. Interest expense net decreased slightly for the year 2025 compared to 2024, but increased for the 9 months ended 2025. The decrease in interest expense is attributed to a reduction in interest rates, while the increase is due to an increase in average debt outstanding and partially offset by a lower weighted average interest rate on debt. Overall, the company's debt level has increased significantly, while interest expenses have shown mixed results with both decreases and increases depending on the time frame considered. The financial performance of the company varied across different regions. In the United States, revenue saw a significant increase from $676,703 in 2024 to $781,966 in 2025, indicating strong growth and success. Conversely, other international countries experienced a decline in revenue, dropping from $13,221 in 2024 to $20,712 in 2025, suggesting underperformance in these markets. Management is optimistic about the company's outlook, citing steady revenue growth of 16.6% in the 9 months ended September 30, 2025, compared to the same period in 2024. They attribute their success to advanced technology systems, proprietary analytical models, and a strong focus on customer service. The company plans to continue investing in its financial services program in Brazil, but may be impacted by regulatory changes. Management expects adjusted earnings per share to increase from $2.45 in 2024 to $9.51 in 2025, driven by revenue growth and efficient operations. They have sufficient liquidity to run their operations for the foreseeable future and plan to reduce cash outflow requirements while increasing cash inflows through repayments. Overall, management is confident in the company's ability to continue growing and differentiating itself from competitors through technological innovation and customer-centric strategies. The company's financial summary reveals a notable trend in its capital allocation strategy. Specifically, the company has engaged in share buybacks, purchasing shares worth $340,544,000 in August and September alone. This significant investment in buying back its own stock suggests that the company is prioritizing shareholder value through this means rather than distributing dividends to shareholders. That concludes the financial summary for ENOVA International INC. Feel free to comment below, and I will be happy to answer them when possible.